Welcome back. Now, Karooooo has delivered a strong start to its 2026 financial year, reporting a 19% jump in subscription revenue. This as it continued to expand its subscriber base. Joining me for a closer look at the numbers is Zak Calisto, CEO of the company. Zak, thanks so much for your time this afternoon. Now, the group, of course, kicking off FY26 on a high with another rather bumper set of numbers. Let's start off by getting into the factors driving growth.
All right, thank you very much for having me on the show. I think the primary factors driving growth is just our ability to execute and our ability to grow our footprint and our distribution. And I do believe the market is much larger than we initially anticipated. And as we grow our business, we find that the opportunities continue to exist. And we've got a longer way to go to address the addressable market.
And you talk about a long way to go to address the market and opportunities for growth that you are seeing. The group has, geographic diversity and has been able to weather tough macroeconomic conditions, really posting, double-digit growth. Talk to me about the growth you are still seeing in Southeast Asia. What are some of the factors that continue to fuel optimism about that region?
Well, I think, today, Asia is our second biggest geography, and it's our fastest growing geography, and we're currently growing at around 30%. Our subscription revenue is growing at around 30%, and we're hoping to increase that over time. And if you compound that into the future, we obviously believe Asia will eventually just be our biggest segment. So we're very positive about Asia, and we've got a long way to go.
And zooming in further on those geographies, looking at Europe in particular, double-digit growth on that front as well. And I see that the group has partnered with OEMs to provide easy access to your platforms. Talk to me about that and the potential it has to boost even further growth and increase your customer base in the region.
I think the OEMs realize that they need a platform like ours to get the full potential of the devices they currently install in vehicles. And that will allow a win-win both for the OEM and for their customers, and obviously also for us. So I think all parties will win. And we believe we're in a very early stage with these partnerships. And I think these partnerships will gain real momentum over time.
And what's the update on Mozambique, Zak? In the previous quarter, you booked an impairment on that unit, but politically things seem to have settled. Have you started seeing a recovery on that front?
Well, I think, we did an impairment. I think these things, the recovery is never overnight, if that makes sense. I think they've got, I still believe Mozambique has got very deeply rooted problems. If we look at the economy and the stage of the economy, there's a shortage of currency. The banks aren't able to put currency, and I think there's a lot to resolve there, in my personal opinion, before we can see a real vibrant economy. So I think, yes, what we're seeing is positive. But I think they have a long way to go to be able to serve the nation.
All right. The last time I spoke to you, Zak, you said that FY26 is a year of investments and you'll be investing more in human capital and operations. Have the increased costs started weighing on margins?
No, we still at very good margins this quarter. I think the Cartrack operating profit margin was around 30%. We will continue to increase our building of our business because when we build a business, we're not thinking for this year, we're thinking for the next 5 years. And, when you employ talent, you don't get the benefits immediately. Typically, somebody really only adds real value to you after they've been with you for a year. So this is something we've always done, but now we're ramping up for hopefully stronger growth in the future.
And in terms of investments, are there particular regions you're looking at investing more, or is the capex spread all around?
Our capital allocation policy is that we don't prioritize any geography over another.
Okay.
It's never so. If you, for instance, want to increase your staff count in South Africa by 20%, that 20% number will be much larger than doubling your people in Asia. But this year we're increasing our salespeople in Asia by about 70%, and in South Africa we're only going to increase the salespeople by around 20 to 25%. So we continue to still grow the market in South Africa. I'm very fond of South Africa, and I'm a great believer that South Africa has still got huge legs for growth. And for that, we continue to invest. We were the only company investing in a big building where everybody was so negative in South Africa. And South Africa had no electricity. We were building a huge building. So if I was positive then, imagine how positive I am now in South Africa.
Okay, Zak, let's look at some of the operations and some of the product offerings, particularly your video product offerings and the integration of AI.
So, AI is a buzzword, and I think you'll understand that. It really is. We used to have AI cameras since about 2018. We called it machine learning then. Now they call it the AI. Obviously, our capabilities today are much better than they were in 2018, and our costs to get the technology today, whether it's data, whether it's hardware, it's much cheaper than it was 7 or 8 years ago. So today we're going to be able to deliver products into the larger market, whereas before it was really just for the very large enterprises that are willing to spend a lot of money to get the benefits. So those products typically come down in price, and I think it's starting to be a price point that a lot of our corporates can now afford it, and we've even got consumer products that can help our consumers as well. So I really believe that we're going to get great momentum with these additional products over the next 12 months. And I feel it's a very positive contribution to our customers.
And last month, Zak, you sold shares worth 1.3 billion rands, that initially sparking a sell-off in Karooooo's share price. But of course, that has settled, the dust has settled. Talk us through the reasoning behind that move. It doesn't change much as you are still the majority, or rather you still hold the majority share in the company.
I think fundamentally when I talk to investors, what you do find is people want more liquidity.
Yeah.
And that round is that it was 3.3 times oversubscribed, but I decided only to sell $75 million. But we had an order book of over $250 million. That was our order book. I decided only to sell $75 million. And I'm still the majority, and I have no intention of relinquishing control in the business. So there is a filing that I will sell shares into the market over the next 6 years. So, but fundamentally, over the long term, the intention is for me to still remain the controlling shareholder.
All right, Zak, thanks so much for your time and taking us through the 3 months that was for Karooooo. That was the CEO of Karooooo, Zak Calisto.